Hey everyone, welcome. It is 6 a.m., half an hour before the market opens on February 15th. I'm on a different computer, so I don't have my camera. My main monitor on my normal computer got zapped yesterday, but we lost power momentarily just for a split second. And when the power came back on, the monitor just didn't like it, got all smoky and doesn't work anymore. So I'm probably going to need the weekend in order to replace it. So for now, for today, for tomorrow, we're going to be on this computer and we won't have camera. But more importantly, we're waiting to see what happens in the market. Let's take a look at our futures. Our futures are insignificant. So just a random tiny bit up in all the major indices, just a random amount. We did have a slew of economic reports come out just half an hour ago, and they don't seem to have had any effect on our futures market and probably on our pre-market. So that's not too surprising. I've been talking about this all week. We had the CPI report that was major. Everything else in the shadow of that isn't going to do much. Retail sales could have done something by itself, but with it being overshadowed by the CPI, unless it's supporting the news of the CPI, then in which case we could get downward pressure. But other than that, we wouldn't expect anything to really move the markets. Same with PPI tomorrow. It does have some moving power, but again, overshadowed by the CPI. So we'll see if it has any sort of effect. I'm curious about the retail sales though, because normally we would care about it. Okay, so retail sales far weaker than expected. Everything negative, whereas we're expecting everything positive. So retail sales are not doing great. This is for January. That means we had a really strong holiday season. We had a really strong Black Friday. We had a really strong Christmas season. And now January, what this report is telling us is that consumers are tapped out. They probably overextended themselves over the holiday season, put a lot of stuff on credit cards. We saw that, and we mentioned that 3 or 4 weeks ago. We were seeing that the credit card balances were increasing. People aren't really paying off their credit cards as much as they were before. So the retailers are pretty much tapped out. That's not great news for continued upward movement in the economy and continued upward movement in all of our major indices. So we'll have to see how the market reacts during the normal session. But so far, at least from the futures, it doesn't look like much happened. Let's see. Let's take a pre-market. Yeah, so this is right here, 5:30. That's when all these reports came out. Probably there's so many of them, it would take a few minutes to digest it all. Initially went up, and then we came back down right to in the range where we were all morning. So just this super flat line all morning in between these two lines right here. We'll talk about those two lines in just a moment. I want to see, because this implies that there was some balancing effect. So some of the other reports might have offset each other. So I just want to dig into that a little bit more. Retail, Philadelphia Fed, much better than expected, but Philadelphia Fed isn't a huge report. Empire State Manufacturing, better than expected. So on the manufacturing front, it looks like we are doing better, but the retail is, it drives 70 to 75% of the market. So we're that these two are not going to be nearly as important as those retail sales. Import export prices. Import prices are up. That's not good news. Export prices are also up. So this on net, this is nothing. Import and export prices month on month changed the exact same amount. So net, there's zero effect. Except we import a lot more than we export. So actually there is an effect, and not in our favor. Business inventory, yeah, everything else is just very minor. So it doesn't look like, I wouldn't read too much into this movement right here. We got volatility just because the reports came out, and it wasn't even that much volatility. If we look at previous sessions, See how much it moves in the pre-market versus how much we moved right here? It's not much. Just yeah, in this pre-market, you see we had much more movement in these other pre-markets. So very minor reports, nothing to get excited about. So we are looking like we will open a little bit higher as implied by those futures, but not significantly higher. What's significant is these two levels. Yesterday, I was talking about this blue line where we wanted to break above this blue line with momentum if we were going to believe in a strong upward market. Well, it looks like we might open right at that line or just above it and below this other line, which I believe is right about the 500 mark. So I can move that down a little bit more, but we drew that line there because of this horizontal region right there. That this purple line right above the blue line, both of these lines represent a span, a region. So I really would treat these two as the same level, and they're a zone, and we're stuck right in the middle of that zone. And that zone is this psychological resistance at 500. So that's psychological resistance number one right here at 500. So we are right on top of that psychological resistance. So it's not too surprising that pre-market we're having trouble breaking through it, but we want to watch very carefully during this session. Do we definitively, with momentum, move above that zone or reject that zone? If we reject the zone, it's not going to be that big of a deal because all it means is, okay, we might retrace back to this trend line, which is normal. So basically, it would just be kind of a sideways movement into this trend line. And then we'll have a situation like right here, where we break out, we either break above the horizontal or we break below the trend line. So last time we broke above, and then we'll have another situation where we're starting to get squeezed in between these two lines, and the market has no choice but to move above one or below the other. We're starting to near that point, but we still have a few days. So our original timeline that we've been talking about for at least a week now, where we have about sometime next week or the week after, we are probably going to get a definitive direction, or I'm sorry, for the next week or week and a half, we are probably still going to be moving to the upside. And then after that, there's a possibility of crushing through the trend line. So we want to watch very carefully today if we can get above this psychological resistance. It's more important right now for this market to get above this psychological resistance so that it can continue moving upwards for that 1 to 2 weeks. Otherwise, it's going to taper out and we're just going to go sideways for a while and then come down, or we'll just break cleanly through this trend line right here. So watch those levels very carefully, especially if you're day trading. Looks like we're flirting with that lower line right now, but once we get the volume of the regular session, it can easily decide a direction. Don't be too surprised if we get a lot of sideways action today, because there's not a lot of stimulus for the market. So other than those reports that we just looked at, and they were, at least initially, did not have a huge effect on the market, there's nothing else to stimulate us. So unless the market decides to get spooked by that retail sales report, which is definitely possible, then we might just get sideways choppy movement. Other thing we want to look at is VIX, TLT. We want to see how those two are doing. And then I want to look at some of the large cap stocks. So the 5 largest cap stocks, because those, after yesterday's post-market session, we were looking at the difference between the performance of the S&P versus the equal weighted. And we saw that there's quite a discrepancy, which means those larger cap stocks are propping up the market. And if we see signs of weakness in them or any one of them, that is another early indicator that we might start coming down. So we're going to look at TLT, VIX, and then those large cap stocks. So TLT chopping sideways again. Looks like we might get above that purple line in the pre-market, but still at the lows of these few bars right here. So we're not going to get too excited about that. That might trade back down during session, in which case we just have sideways movement. VIX is coming back down. So we may have another opportunity. If you want to hedge using VIX, it's not a bad idea. We went over a VIX hedge either yesterday afternoon or yesterday morning. So VIX is still a decent idea to hedge your portfolio, not as a position by itself, but in order to hedge, you can do it as a position by itself also, as long as you're okay with the risk and the risk reward profile. But it's really, when we examined it, we were examining it as a hedge. So if you go back and you watch that video and you decide that you want to do a similar trade, just be aware that we evaluated it as a hedge and not as a position by itself. So now let's look at those larger market cap stocks. And I just want to take the top 5. Oops. Okay, so we got Microsoft, Apple, Google, Nvidia, Amazon. We could look at Meta if we wanted to as well, top 6. See, it depends on how much time we have. Microsoft and Apple. So Microsoft pulled back to its EMA 20 2 days ago. So on the day where the S&P pulled back to its EMA 20, Microsoft was still strong above its EMA 8, but then it caught up the day after. No, this was the day. What is this? February 13th, SPY. February 13th, yeah. So Microsoft also pulled back to its EMA 20, so it makes sense. It's one of the largest, actually the largest market cap stock in the S&P 500. It went down to its EMA 20, SPY went down to its EMA 20. So the really large cap stocks are pulling the S&P right now. And so whatever they do, it should be mirrored inside the S&P 500. There's super high correlation always, but they're really high correlation now. So normal correlation, at least 70%. Right now, it's probably almost 1-for-1. So Microsoft looking like it's get caught between its EMA 20 and EMA 8. So we'll have to see what Microsoft does right here. Next was Apple. Apple was not looking good. Not looking good at all. It's down at its MA 200. There was news that their Buffett, I think it was selling yesterday. So in the pre-market, looks like we're at the MA 200 or just below the MA 200. Normally, if an institution, Warren Buffett is an institution. I said his Berkshire Hathaway is definitely an institution. So they don't sell just for one day. They have program selling. It has to be over a period of time, unless he's just kind of like taking a baby position. But if he's making a shift in his portfolio, that's going to take a while to exit. So that's going to mean that Apple is not going to be able to get above a certain level for a while. It doesn't mean that Apple's going to crash. It's just going to say there's a cap to Apple, because if every time it goes up to a decent price, Buffett sells, and it goes up and then it comes back down, and then it goes back up to a decent price, Buffett sells, and it's going to keep on happening until Buffett is done selling. So I don't know for certain that Buffett is selling, but if he is, if that rumor was true yesterday, and that it is a programmed selling, meaning that he's exiting a position or he's rebalancing his portfolio, and he has a significant number of shares that he's going to exit, then that's going to put a cap on Apple for a while, which means that Apple, as the number two largest market cap in the S&P 500, if that's being capped off, then it's no longer helping pull the S&P 500 up. And so now you just got you've got four giants or pushing the market up instead of five giants pushing the market up. And we were talking about running out of breath, right? It's like there's only so long these few number of stocks can sustain that before their steam runs out. So that's another sign that we might be topping out. That was number 3. Google, Nvidia, Amazon, Meta. Google at its EMA 20, similar to Microsoft, but not as strong. We had this gap down. It was just barely recovering when we got that pullback. So Google not as strong. Amazon strongest out of the ones that we've seen so far. On the day of the pullback of the S&P 500, was still well above the EMA 20. So Amazon's still looking good. And then Nvidia super strong, super strong. So a lot of the weight is being carried by Nvidia right now and Amazon. And let's look at Meta. Meta just completely flat. It barely did it. It's very strong. But when we had the pullback in the S&P 500, all it did was blip down to its EMA 8, which was at the lows of this sideways trading region anyway. So it was basically insignificant in terms of the movement for Meta. But all we're doing is chopping sideways. And if we chop sideways, we're not contributing to pulling the markets up. So we really want to track the two strong ones that are contributing, which are Nvidia and Amazon. We want to track their performance very carefully. And the one that looks like it might crack, which is Apple. So we will want to track Apple very carefully. So I'll throw that on my day trading one so I don't forget. Apple, Nvidia, and Amazon. Not that I want to track them intraday, but they're on a day-to-day performance. They're going to be important for that index. Intraday, they will be obviously important as well, but I'm not day trading any of these. So I'm not throwing these up here to watch their levels throughout the day. I'm just throwing them up here to remind myself to look at these when we do the daily analysis. So that's what we want to watch out for. We want to watch very carefully today. If we break out of this zone, and then do we break out with momentum? Does a trap get set up? So if we break out with momentum upside, do we get a trap set up? Or if we break down with momentum, do we get a trap set up? And then we start retracing in the last. So remember, the last week or so, almost every single time in the last either 2 hours, 1 hour, or half hour of the market, we got a strong surge, directional surge, and oftentimes a reverse. So here we wouldn't call it a reverse, it was sideways, and then we chose to go upwards. But over here, in the last half hour, we had a major reversal that got us flat for the day. And then over here in the last 2 hours, we got a directional movement downwards, and then we went sideways into the close. Over here, directional movement upwards, sideways into the close. So we really want to watch the close especially to see if we get a reversal in direction. During the day, unless you're day trading, we won't really care that much. And then it's really what happens in that last 2 hours if we get a directional movement. So watch this zone very carefully, and then we'll see. But for now, let's step back for a moment, because we've been looking very carefully, like with a magnifying glass, like with a microscope, at what's going on in the markets. But if we zoom out and we just take the bigger picture, we are still in the uptrend. We did bounce off the trend line, and so we are still moving upwards. And our viewpoint for the next 1 to 1.5 weeks is still that we should be moving upwards. If it's a little bit weak, then we'll chop sideways. And then after that, we have potential for a 5 to 10% pullback or correction in the market. But we don't want to make that determination now. We want to give the market its 1 to 1.5 weeks, and then we'll examine it again. So our portfolios are still pointed to the upside, and then we hedge against any possibility of breaking through the trend line to the downside. Okay, so that's it for today. We're about 10 minutes before the market opens, so we'll just go and prepare for the markets. And I will, excuse me, I'm losing my voice at the same time. So I will see you in the aftermarket session.